Thank you for your email, by the way. I
Oh, yeah.
appreciate you checking into it. I'm not sure what occurred, but I got everything else in.
Awesome. Yeah, of course. Yeah, Eileen and I were looking into it because we we like to stand by what we say.
I love it.
Good morning, everyone.
Good morning.
We should have a couple of other folks joining us this morning, but this is meant to be a more intimate setting, intimate environment, really so that folks can be able to ask questions, learn from each other, etc. So we can go ahead and kick things off with just a couple of ground rules in terms of this hour that we have together. And with that said, we know people have things to do, so you don't have to join us for the entire thing. And if you are able to come on video, we'd welcome that as well, but understand that people have different responsibilities in the morning. But we'll give a quick intro, ground rules. We'll share our introductions and introduce our firm as well, but we would love if folks could do a 1 minute intro to themselves, their name, the name of their company, a 1-sentence description of what it does, and then maybe a quick your favorite donut. My birthday's coming up and I want a donut, so maybe your favorite donut. And then we'll get into the topic of today. We'll keep it first 20-30 minutes on the topic of building out your team, but then the last half we'll keep it open to questions and answers, really for you to share what's top of mind for you. I mean, the reason why we're doing something like this is so that it's meant for people who are tired of Googling. We know that there's not a lack of information online and lots of smart things that you can read, but I know that I get frustrated with the sheer amount of information online. And so sometimes it's better to just to hear from one organization's perspective and ask the question directly versus trying to make up your own, trying to get your own answer with all of that's available online. So just a couple of quick ground rules. Again, take space, make space, really ask you to share your own personal perspective. One of the things that we've done this for over a year now, these Slauson Spaces, and one thing that we really enjoyed is that founders learn a lot and take a lot from each other. And so we really want to continue doing that as much as possible. And again, you can drop off as you please. We don't expect you to attend this whole session just as much as you are able to and find meaningful. And again, we will be recording this to publish on our YouTube so that others who aren't able to join today, or you even can watch at your leisure asynchronously in the future. So we will do brief introductions from ourselves, and then folks can introduce themselves again. Name of your company, 1-sentence description of what you do, and then your favorite donut. I can go first really briefly. My name is Jesús. I work at Slauson Co, which I can give you an intro to after we've done introductions. And my favorite donut will have to be this Earl Grey donut that I had in Portland at this really famous place. It's delicious. I'll hand it over to Eileen.
Hi everyone, I'm Eileen. I'm the platform manager at Slauson. So I work mostly on the post-investment side, but supporting Jesús with these spaces. And yeah, just excited to see everyone here. I think my favorite donut is a crumb donut. I don't know if that's what they're called, but it's the one that has like all the crumbly things on the side. It's like cinnamon-y. And it's so good. That's me. I'll popcorn it over to Candace.
Hi, good morning. I'm Candace Walker. I'm the founder and CEO of Generation Connect. We bring together teens with seasoned adults for engagement, enhancement, and entertainment services. I'm excited about this. It's not an office meeting, but this gathering, because I am in need of expanding my team and needs need to think about how to approach it because we're at the precipice of some big opportunities. Not there yet, but I would love to have the person on board as we, reach those milestones. My favorite donut, I would say, is glaze, the classic glaze. So looks like Vu turned his camera on, and I'll popcorn to you.
Awesome, thank you. Hi, my name is Vu, and I'm the founder and CEO of Hitmaker. We're an end-to-end audio collaboration platform addressing the issue of the challenges in remote audio collaboration. My favorite donut is Ube Donut at this place here in San Mateo. And
You have to text me the name.
Yeah, I'll find that and text it over. Pass it over to Erica.
Hi, my name is Erica Stewart, and I'm co-founder of a group called FIA. We have a predictive analysis tool that, to make it very simple, we say can be utilized to sort of de-risk dating or de-risk risky relationships. So we have gathered a good amount of data, and we need that support, that wraparound sort of data scientist support, because we're worried that what we will do with it won't have the same integrity that's needed. So I came here because I wanted to understand what other people did. I like the term precipice because I feel like we're on that precipice, and this is a really important moment for us. Donuts. I like blueberry donut. And out popcorn to Dr. Gregory.
Hi, good morning. I'm Gregory Caneas, and I'm the CEO of Caneas King. We're a spirit brand in the making. And they also run a company called Slauson Global, and we do premarital counseling and LGBT couples retreats. Favorite donut is Lemon Field.
Awesome. Thank you. I just put in the link. I think there's an echo. Is that just on my end? Oh, no, it's off. I just put in the link to the donut place that I did, that I was recommending. It's called Dough Donuts. If you're ever in Portland, highly recommend it. But I'll quickly introduce our firm just so you have a bit more context, and then I'll share a couple of slides that we prepared. Nothing too intense, just a couple of slides. But really briefly, in terms of our firm's background, we are a $75 million pre-seed and seed fund rooted in economic inclusion. How that shows up to us initially is through our two primary areas of investment. Our B2B thesis is SMB tech, which we define as tools that support the next generation of small business owners. And our consumer thesis is what we call culturally aligned consumer, which refers to companies building scalable products or services that are targeting overlooked customers. We're typically investing in between $250K up to $2 million. Average checks hover around 1 on the pre-seed side and 1.4 on the seed side. We have 34 portfolio companies, half of which are pre-seed, half of which are seed. And again, a rough 50-50 split between SMB tech and culturally aligned consumer. Our secret, not so secret sauce comes across in our name. So Slauson is a prominent street. We didn't ask where folks were, but I know there's at least some folks that are from LA. So Slauson is a street in Los Angeles. One, it's where our general partners grew up, but two, it's a prominent thoroughfare that cuts across culturally rich but systemically disenfranchised communities, cutting into one of the wealthiest communities of color in the nation. And so we're using the street, or the analogy that the street takes on from one end to the other, to be representative of the journey that we want our founders to take as they're working with us. So then the ANCO part of our name, we refer to as the company we keep. This includes everyone in our ecosystem, including but not limited to our investors. We're fortunate enough to have some of the big techs, Google, Meta, PayPal, Twitter, etc., late-stage venture capital firms, notable individual VCs, artists, operators, and founders of prominent organizations that are all excited about leveraging their Rolodex or expertise to support our founders whenever they have a challenge that they've likely faced before. And we are Slauson is also where our general partners grew up. So there's that connection. We're only investing in US based companies. We're a small-ish team of 7 now. It's big for us, but small for other organizations, primarily based in Los Angeles. But I'm the only one not there. I live in Oakland. And so with that, and Eileen can drop in a link to share more information about us. And the easiest way to contact us is through our website. We look at and review everything, and we do respond to things that reach out to us in as timely of a fashion as we can. But Eileen will drop in a couple of links for everyone's background information. I'll share. Oh, Eileen, can you enable screen sharing, please? So I'll first start off, I just have 2 slides prepared. I'll first start off with sharing how we evaluate teams that that pitch us. And then I'll share a couple of high-level thoughts and considerations. So again, we'll keep this first 15, 20 minutes on this topic. Please come off mute, ask questions, etc. And then we'll end the latter half of this session with any questions that you might have, whether they be specific on the team or not. We can go into any topic that's relevant for you all. So to begin getting our perspective on what we look for and what we value as we are evaluating teams. So first, a couple of bullets. One is relevant experience. We really prize sector or domain expertise. And so if you are able to show or explain how through your work and previous experience, you're able to now be building something that's relevant, or where you are in many ways an expert, that helps us get more confidence, because the reality is there's very few generally speaking, most VCs at the early stage have somewhat of a generalist approach. And so unless you're talking to somebody who's a very specific supply chain venture capital firm, they're going to want supply chain expertise. But the VCs that are work there are likely going to have that deep domain expertise themselves, which is good, and that's part of their strategy. I mean, but for us, and I would say likely the majority of early stage firms, we have to be generalist in nature. And so what that means is we're going to know a little bit about a lot of things, but we're going to look for folks who really understand the opportunity that they're going after. We're going to do our homework as it relates to our diligence to make sure that we feel comfortable with knowledge that that the founders have, and how that translates into what they're building via reference checks, via interviews with experts that we have in our network. But whenever we know that, whenever we're able to have confidence that you're building something where you have deep domain expertise, that gives a lot of confidence. That's on the first bullet. The second bullet really is important because like I mentioned earlier, we're investing at the earliest of stages, pre-seed and seed. And so we know, we know that you will have to hire a not insignificant amount of people to join you. Some of you already mentioned being at some of those stages. And so we want to get some level of confidence that you're going to be able to inspire others to come work for you. And because without that, even if you have all the money in the world, somebody might come, but they might not stay. And so we are trying to get a sense of your ability to attract and retain talent. Some of the ways that you're able to show that really right off the bat is to show how much of a team you have built so far with likely limited resources. So whether that's on the other co-founders, or whether that's other leadership team, advisors, contractors that are working with you, whether that's for sweat equity, or whether that's for whether that's for some other form of working relationship, that shows us that you have really motivated and excited a group of other folks to align with what you're building. So attract and retain talent. On the vision and ambition, so this is one where we want to understand that founders know what they're setting themselves up for when it comes to the venture capital game. By that I mean it's a long-term journey. Our funds' lives are 10 years, and it can go longer if needed. And so we know that this isn't going to be something where next year or in 2 years this is going to be the next public company. We hope for that, but if you signal to us that you're not wanting to go on that journey, or that you have something else in mind, if you yourself are looking for something that has an exit in a couple of years, that would mean to us that you're looking for something that's not as aligned with what we're looking for. I mean, we're really trying to back category defining businesses that are going to be the blanks of blank in 10 years. So whenever someone refers to an industry or sector, we want your company to be synonymous with what that sector is doing. So if you don't have that vision, that isn't a bad thing. That's more of understanding the right capital resources for you and your business, and given your needs and your time horizon. So we want to understand that you are in this for the long term. And then on the communication front, at the early stages, especially if you're pre-product, pre-revenue, which we do look at, you're going to have to communicate your vision. Storytelling is something that we really care about, because we know that it's powerful, and you're constantly having to tell stories as it relates to your pitch, as it relates to hiring, as it relates to selling the vision and the mission to other investors, to other advisors, to people that you're hiring, to customers. And so if we leave a conversation with you not understanding what you're doing, not understanding your background, that's a big missed opportunity. And we do our best to come to the meetings as prepared as possible, given the amount of information we have, et cetera. But really honing in on your pitch, making sure that you are able to leave, at least whenever we're taking conversations with founders, leave that conversation with a really clear sense of what you're building, why this is a big opportunity, why you're the right person or team to go after this. And so communication, really important, especially at the earliest stages. This fourth bullet, coachability, this is a much more subjective one, but one that we really found to be very important, particularly for us and our type of firm. So given the amount of ownership that we aim to take in companies, which generally speaking is around 10 to 15%, we know that isn't a non-trivial amount of ownership. And so we aim to be as hands-on as possible. We like to call ourselves somewhere between a coach and a cheerleader. And so tying this back into the vision and ambition, if somebody doesn't want an investor who wants to support, sometimes there are folks who want somebody who just is going to write a check and is going to stay out of their way and just not be as involved as one would want, as we would want to be. That's fine. That's not the type of investor that we are. And so from a coachability standpoint, we're really looking for somebody who's open to feedback, who's open to suggestions. We don't expect somebody to take all of our feedback and suggestions and recommendations. We want somebody who's going to have their own opinions and sets of values, but we want to help, and we need to help, because once we've invested, we're in this to support you as the founder or founders, and we need to see you be successful, and we're going to do all that's in our capabilities to make sure that happens. So coachability, again, something that likely comes through across in references with former colleagues, et cetera, or even just in slight nuances around conversations. The one thing that I will say about all of these things, and even on my high level thoughts, as we evaluate the team, we have to sometimes do it off of one conversation. We don't like to, but because sometimes founders, or the norm is for founders to reach out to us and say, hey, I'm raising, are you interested in investing? And that's fine. We take those conversations. I would highly encourage any founders that I speak to, and we encourage our founders that we've invested in to start building relationships with other funds as early as possible, because the reality is the majority of these things, and even outside of the team, aren't something that you can successfully determine off of one 25-30 minute conversation. even just off of one meeting. And again, we have to do that because that's to keep up with the pace of companies that are pitching us. We have to in many ways, but you're better off establishing a relationship early on, so that you can show a lot of these things through your interactions, through your updates, etc. And on the update side, our last Slauson Space was around stakeholder updates, which is on our YouTube and you can check out at your leisure. But I'll move on to these other bullets. The purpose and motivation, again, we mentioned our mission around economic inclusion and how our two theses tie into that. We don't expect somebody to have the same vision that we do, but it is a win-win whenever the founders are mission driven by what they're building, because we know that that's going to be relevant whenever the times are tough and you have to make some tough decisions or take some tough actions. And similarly, your team, if you're aligned by the mission of your company and you're motivated by that, that's going to be easier than if you were just doing this because you were looking for some sort of quick exit or quick turnaround, or just hopping on the right trend at the right time. We were looking for that mission-driven team and organization. The cadence of progress. So we always ask, especially if you've raised some capital, when you raised, what's been accomplished to date, what you hope to accomplish with the amount of funds that you're raising right now. And so if you can, we like hearing, we don't expect necessarily pivots. We know that you are going to make a lot of them, even if they're minor or small, but the more that you can show that you've done informed pivots, this also goes into coachability, the more that you can show us the direction, the experimentation, the direction changes you've done, the experiments that you ran, and how that's informing your current focus. That goes a long way, because we know that the company and the idea may shift, may change, oftentimes completely, but the team isn't. And if the team, i.e. you and your leadership team or the co-founders, if you have any, if that's not going to change, we need to know that you are okay with being able to change the idea, the business model, etc., so that you are able to find something that is going to be meaningful, that's going to meaningfully resonate with customers and ultimately find product market fit. We know that you're not going to have everybody that you would dream of on your team day one. But again, the more that you can show that you are able to attract talent that's good, we also want to understand that you have a plan for what the team should look like, where your gaps are, how honest you are in your capabilities and your expertise. And so we like to ask, typically whenever companies are raising at the early stages, they're hiring to raise capital to hire talent, know that, but it's better to understand who you're hiring, what kind of backgrounds they are. As a bit of an aside, there's one founder in our portfolio whom, whenever we were having conversations with them about potentially investing, she talked about how she had this, basically a spreadsheet with broken down by stages, by roles of people she had been more or less curating years before she even started her company, while she was still working at her full-time job before leaving full-time to start on the venture she's now on. She was saying, I was talking to this product person who I wanted to be my head of product, and if they weren't interested in what I was building, I would ask them, hey, who's the smartest person that you know that I should talk to that may be interested in what I'm building? And so like that, she had a list of names, had a list of targets, and while that and she had already had conversations with them. Some of those people, she said, hey, these people want to come on board. They're going to come on as soon as we raise the capital. So that's one example of somebody who's frankly quite impressive, and very that level of proactivity really stood out to us. I mean, that wasn't the only reason why we invested, but that goes a long way. And so planning out to the extent that you can, what your human capital needs are is important. And this last one really relates to folks who have other founders on their teams. founder relationships are, it's not being a solo founder isn't easier or harder than having co-founders. Both are challenging in different ways. And so if there are co-founders, we really want to have a relationship or get to know both of them. We're probably going to mainly interact with the CEO most often, but we want to also understand the motivations and the vision of the other co-founders, if there are some. And direct conversations is one way, references is another way. So we want to make sure that we are aligned with all leaders, especially whenever it might just be two people. It's the two co-founders that we've invested in, which we've done before. So I'll take a quick pause here, maybe just to see if there's any thoughts, comments, questions from anybody on the call so far.
A quick question, Jesus. So for
Please.
the hiring plan and roadmap, is this something that you guys will want to see in a pitch deck or just during conversation?
Yeah, thanks for the question. We likely, on the first conversation, we won't ask for it. And thanks for the question. Our general process is we usually have one conversation. It's usually me as the principal on the team. I look at everything pre-investment, and post my conversation with you, we then have a conversation. We then have you have a conversation with each of our managing partners. There are two of them, and then it's after that point that we get into formal diligence. By formal diligence, I mean typically asking for a data room. So the short answer is you can include it in your pitch deck. Don't feel the need to go through it on your first call, but highly recommend for you to have it in your data room. And there's always the appendix of your pitch deck. So I always advise folks to be on the brevity is key on a pitch deck. I've seen 30, 50 plus slide decks. I would strongly encourage you to have no more than 10 or 12, but you can have an appendix and you can put more stuff in there. So you can have it in your appendix if it's just one slide, or include it in your data room.
Awesome, makes sense. Thank you.
Thank you. Alrighty, we'll move on to this last slide, which is just some high-level thoughts, considerations from our standpoint. So when it comes to building out your team, money and speed and fit are important. Double clicking on each one. By money, while you might think I just need money to hire somebody, yes, that's true. However, again, in my earlier example of the founder who already knew who they wanted to hire, that's an example of hey, this person already has a plan of action versus assuming that money will solve all problems, which one of my points here, money doesn't make it easy. It can make it easier, but it's not going to solve all your problems. And I say this because our portfolio company founders sometimes have that misconception of, I just need the money to hire the people. And yes, we are aware that you do need money to hire top talent. We're not saying you don't, but you're still going to have to do the work of interviewing, of finding the right talent, of finding the right role, having the right job description. And timing is important. So this goes into my next point about speed. So whenever you first raise a round of capital, you're now excited about hiring 3 to 5 key people. But it takes time to hire, especially to hire the right talent. And so the more that you can do earlier on to start to have identified, even if it's just a job description, like if you have that crystal clear, that's already going to save you time, because the reality is once you've taken venture capital, it's a bit of like the clock is ticking in the sense that we have expectations for whenever you're going to raise your next round of capital. And the market does too, because other investors are going to ask about, well, when did you raise your last round of capital? What have you accomplished with it? And so once you've done that, you want to be in the best position to hire as effectively and efficiently as possible. But the reality is it takes time. And on the fit perspective, this is where you really want to make sure that someone understands what they're signing up for from an employee standpoint. Oftentimes, joining a startup might sound cool and sexy, but somebody might not understand that that involves a certain level of that might not be the same thing that they have currently. It might be a very corporate job. Not that a corporate job is bad, but a startup is different than a corporate job. And so you really want to understand that this person is aligned with the vision and the mission that you've set out for your company, but also is understands the risk associated with joining a startup, understands that you're going to have to raise likely another round of capital, likely in the next 2 years, and you're going to have to do that again at least once more before you can meaningfully find product market fit. And so the more that you're able to find talent that understands the startup world, the better off you'll be. That doesn't mean hire only startup people. That just means making sure that you feel confident that they are aligned with everything that you're going after. These next two ones are closely linked. So be mindful of timing and titles. I mean, we've seen, whether it's company in our portfolios or not, or companies not in our portfolios, somebody hiring too senior too early, or too many junior people, etc. There's no right way to build a company. I mean, there's things that you can do that will help you be more successful, but if you're in doubt, maybe be more conservative. So, and there's small nuances. So again, when I talk about timing or speed, if you are able to, I have identified the role, even down to title, that will help you go a long way, because somebody who's a C-suite, chief, etc., chief blank officer is going to have a different set of expectations from a compensation standpoint, from a responsibility standpoint, than somebody who's ahead of blank. So one example we see the small distinction is a CTO versus a head of engineering or something of that nature. There are small nuances, and we talk to our founders about those nuances versus and on the talent piece, sometimes our founders use search firms as well. They're expensive. I can't say they're not worth it, because sometimes they are really good at finding you talent, especially when it comes to speed. But they're expensive. So take that into consideration if you do decide to use one. Typically this happens once we've invested, and it's not for all roles. It might just be for one. But going back to the titles, just being mindful, because whenever you're hiring somebody, they might have a different set of things that they care about. They likely care about many things: compensation, work-life balance, title, etc. But you want to make sure that the role that you want them to fill exactly matches the role that they think they're filling, and they're not assuming more or less. And so again, the small nuances with the C-suite folks versus head of something. And then the reality is that you're going to have different needs depending on different stages of your company's trajectory. So at the seed stage, you're going to have a different set. You likely need a bit more generalist experience than when you're at the Series A, where you're going to have, depending on if you're a fintech product, for example, likely a CFO in place that knows the industry, that knows the regulation, etc. And so being mindful that the people that you have early on might not be in that same role, or might not even be at the company once you're at Series A or Series B. And that's not necessarily something that you need to tell them. It's just more of something that you need to understand, that you're going to have different needs depending on the different stages that you go through as a company. This last one, geography, I say less relevant now, but I think we're still living in a hybrid environment. I know that corporates are forcing people back into the office now. But this is something just to be mindful of in terms of the culture that you want to build. A lot of our companies in our portfolio have hybrid work environments. Some of them have hubs in different cities, depending on how big they are. Some of them are just 2 people, so it's easier for them to get together, etc. But just being mindful of the culture that you want to build, depending on the talent that you're trying to hire. Some of our companies do use offshore talent, and they have to wake up at crazy hours in the morning or in the middle of the night to communicate with them. And so just being mindful of where you're going to be hiring and what the implications are. And then these last points on the right side, and I'll be brief so we can open up to more questions and answers. Advisors, you don't have to have advisors. They can be helpful, and they can help supplement some of your team, especially at the earliest stages. But I wouldn't spend all of your time trying to track down advisors whenever you have other things that you could be focusing on in terms of fundraising or product building or even sales. But they can be a helpful set of advisors can be really beneficial to the company, particularly at the earliest stages. And focus on what you can control. By that I mean you can control your team. You can control who you talk to. You can control who you hire. You can control who you contract, etc. This ties into my last point, which we as VCs have to compare very different teams all the time. And I say that and I'll give you an example, or going back to the early example of the founder that we invested in. So that's if she says, hey, I have my C-suite team identified already. I know who they are. I've talked to them. They want to join as soon as I raise a round. Let's say that's one example of a team that pitched us. Another example might be, hey, I have a team identified and they've actually been working with me as advisors already for the past year and a half. And once I close, they're going to come on full time. Versus a team that's saying, hey, I have a team already built out. They've been working with me pro bono for the past year and a half and are fully committed and will join full time with compensation whenever we raise a round. Those are just 3 quick examples. I'm not saying that people need to work pro bono, but I'm giving you examples of different companies with different approaches. And in those 3 examples, neither company is better than the other company. However, in the 3rd example of, wow, somebody has gotten other people to work on something without getting compensation, that clearly, in theory, means that they're really able to motivate somebody or a set of people around this mission and vision, and that those team members are really committed and they already have a history of working together. Versus the first example of the founder we invested in, we don't know how they're going to work together, those leadership people, even though they're identified and they are interested in coming on full time, there's still a risk. And so the more that you can de-risk your team, again, either by having advisors or by having people work in some sort of contract relationship with you, that helps you, one, figure out how strong of a candidate they're going to be whenever they work full time with you, and what your working relationship will be like. So last points, hiring a sales, you likely already know this, you're going to have to be selling your vision, your mission to other people that you hire, to customers, to investors. It doesn't change when it comes to hiring. And again, I already touched on this, but money can help. It's not going to make it easy, because the reality is top talent gets snatched up quickly. And so you have to be mindful that money is important, and a certain level of compensation is going to be asked for top talent, but you have to make sure that they're aligned with the vision, that they're aligned with the risk tolerance, that they understand the startup journey, so that you don't have to do a lot of education once you've brought them on board, and or they end up leaving because they didn't know what they signed up for. So I'll pause here. I know we only have 20 minutes left. Any thoughts, comments, questions on anything that I've shared here?
I have one. So
Please.
would you suggest that we look at maybe contract roles and then a sort of progression of bringing a team on board where you start in maybe a contract capacity and then move into a hired, employee role with, options as part of the incentive and et cetera. It's like, just making it each step of the process, the employee is proven over time, and then the reward aligns with that progress.
Yeah, I think so. I think if you, I mean, that sounds really nice, and when it does work, it is really nice when it does work. So I think if you can craft a working relationship such that, I mean, depending on what stage you are, like if I'm a founder right now, I don't have a lot of capital, but I know that I need to hit a certain amount of milestones in order to raise a pre-seed or a seed, what have you. And so let's say I want to hire a product person or a CTO, for example, or even somebody on the marketing side. If I'm able to find talent that I know will do great work, and if they're excited about it, but maybe they have a full-time job, and so I'm not expecting them to come join me full-time right now, but I want them to work with me, and let's say they are willing to work with me, then it's conversation around, okay, well, how do we structure this working relationship? Maybe you're an advisor and you give me 5 hours a week, or maybe you come in on a part-time basis and I'm paying you some sort of sub-market rate amount but you're getting some sort of advisor equity or only advisor equity. How you structure it obviously depends on your financial level of comfort with giving up equity, but also cash compensation. But regardless of how they get involved, if they are able to get involved early, generally speaking, that's a win-win because you're able to see how they work, in terms of their pacing, in terms of their vision, how that gels with what you have to offer. And in the worst case, you're like, hey, this isn't really working out. The breaking up or the letting them go, if you will, is much easier than if you just spent so much time, so much energy trying to get somebody to work full time with you, and now it didn't work out. And the reality is you're going to have to hiring and let go of people eventually as the CEO of a company. But if you are able to have that test run, so to speak, I think that goes a long way, and we've seen that play out.
So in the sort of hiring timeline, if it's structured in a way that shows that test period, then at least at a minimum, it shows the thought process of how you're going to build your team, you would say?
Yeah.
Okay.
Yeah, I think so. And again, one quote that I took from a founder a long time ago is us as a pre-seed or seed round, let's say if we're investing at your pre-seed round, we need to understand that where you're headed. And the quote that I borrowed is, this round is always about the next round. So what that means is I need to understand that what it's going to take to raise your next round of capital, which means, because that's the only way that my investment is successful, generally speaking. And so if you are able to help me gain a certain level of confidence that what it will take to raise a seed round. Now your question might be, well, how do I know what I need to do to raise a seed round? That's a good question. You come here and ask the question, you look online for resources, you make friends with VCs to ask them these types of questions. And then that your pitch shows, hey, this is what's gonna make us successful to raise our. You don't have to be as explicit as we're gonna raise our seed round in 6 months or whatever time frame, but we need to understand that that you have milestones in mind, and milestones are generally product, revenue, or team driven. And so focusing on the team front right now, knowing who you're going to be hiring, what stages, what levels, and ideally you've already identified them, or even more ideally, they're already been working with you in some capacity. That will help the speed with which you're able to produce those milestones and be successful in hitting the milestones.
So part of your, as you mentioned, part of Slauson Co's when investing in a founder is that next round. That's how you guys.
Oh, you cut out, Candace. I'm not sure if that's just for me.
Okay, can you
Oh,
hear
you're
me
back
now?
now.
Okay.
Yeah.
So what are you looking for? Like, where do you want that company to be?
Oh, you cut out again, Candace. Is it just me?
Am I
No.
back?
Yeah. You said where you said what are we looking for?
Yeah, where are you looking for that company to be for going from, say, pre-seed to seed? So what, like, X are you looking to gain for that next round of raising
Sure. As it relates to the team or in general?
in general?
Yeah. In general, the short answer is it depends on the company and the stage that it's at. So let me see, I'll give you an example. Yeah, this is where a one-on-one conversation might make more sense, because there's the business model, there's a stage, everything matters. But for example, we invest sometimes at the pre-seed, pre-product, pre-revenue. So in those cases, the let's take those cases as an example. At the seed round, we're going to expect for you to have launched a product. We're going to expect for you to be generating revenue, and likely have built out your leadership team if you haven't already. Ideally, you already have, and unlock some sort of go-to-market playbook that you've tested, that you've iterated, versus us having invested at the seed and you likely are already post-product, post-revenue. And so there, the expectation would be year-over-year growth, retention metrics, and it'd be it wouldn't be fair for me to give you those numbers without understanding the nuances of, you a B2B company, are you a consumer company, are you post-product, are you pre-product, are you in a private beta, etc. But yeah, and that said, there are macroeconomic implications involved too. So what I mean by that is right now in this environment, at least anecdotally, it seems that deals are slowing down in terms of the number of them getting done right now. This is relative to the past couple of years, which have seen a lot of companies being funded. And so a slowdown in the VC ecosystem means that VCs may ask for more. They may take longer to make a decision. They may ask for more data. They may ask for deeper diligence. And so that doesn't mean you won't get funded. That just means that what you thought might be a 1 to 2 month fundraising period might take twice that. So yeah, not fully answering your question, but more so because it depends on the stage and the type of business that you're going after. But generally speaking, if it's a pre-seed, pre-product, post-product, probably you've developed a product already, you've launched, you've gotten some revenue, and you're figuring out a go-to-market playbook along with a strong team.
Thank you.
Yeah, and now Rolando has his hand up.
First of all, just thank you for hosting this. I'm actually having HR related issues in terms of finding who to hire, the right person to hire. This is a very helpful talk. So I guess my first question, I've been blessed to be in an industry that is highly lucrative, but I think I learned from previous work experiences to grow proportionately. I think I've seen a lot of companies grow too fast. So they're really for right now, for the framework that I have currently, there isn't really much of a guide. I don't know if it's in my personal experience or just in work in general for like who you should hire and how do you diagnose who you need to hire. I don't know if you guys, I came on the call a little bit late, but I don't know if you guys talked about a system for identifying your needs, and it gets to be a little bit of blurred line, especially when you start talking about like, we're a product-based company, we're a service-based company. I don't know if you want to elaborate on that, or if there's resources that you might be willing to point me in the direction to find a better framework to make those judgments And then I have other questions after that, but let's start with that.
Yeah, so I'll share a couple of thoughts. One is a resource that I think Eileen can share. It's somebody who's a service provider whom we work close with. It's called Tandem. You can find more information about them, but that's an organization that we've even used ourselves. But basically it's consultants. This is just a firm that's built out around HR needs. So check them out. But separately, that's one way to approach it. I think secondly, whenever it's ideally having advisors, if not investors, that can help you with these types of questions. So whenever we're investing, a lot of the conversations often is around who do I need to hire, who I think I need to hire. Is it the right role? Is it the right state? Are we at the right stage to hire that title or that job, that background of a person? So one is narrowing down on exactly what your needs are given the stage, which to your point takes time. Then I think is the actual looking for that person. And this is really, again, where you can lean on hopefully advisors, if not investors, as interviewers so that they can also gain a level of, because likely they've already been working with you in some sort of capacity. They should get and understand what you're building. And whenever they're having these interviews, or maybe not interviews, but just conversations with these candidates, we do them for not all the time, but we offer them, especially whenever it's a leadership role that a founder is hiring for. After a certain point, we'll have a conversation with them and we'll give our opinion about, hey, we actually don't think that this person is really excited about joining a startup, or hey, we actually don't think that this person is the right level that you think they are for what you need at this point. So I think it's a two-pronged approach. One, coming up with the role, the JD, the right type of role. And then second is on the interview side. I think but leveraging advisors, investors, and if not consultants is one way to approach it.
Got it. And then the other thing too, it's like, you have all these advisors and consultants, which it's funny because in a world where you have startups and you get everything to be quantifiable, a lot of it is intuitive and what you get and what you feel from people. But I was wondering, are there any established ways or KPIs to judge if this is the talent that you should be hiring after you hire them, for one? And then what do you do when you have, for example, in my industry, we're essentially in multi-sector solar. There's a lot of solar companies out there. So branding is very important, but you can't really quantify branding. So how does one make a judgment? I was having this personal issue because I was like, I want to hire somebody. They are asking for a very big ticket in proportion to how much we earn currently. But I see the value in it in terms of differentiation in the market, but you can't really quantify that. And it can be very easy to go 3 months into a contract and you're like, I'm not getting my money's worth. So I don't know, just maybe how do we navigate certain KPIs and where certain KPIs to make these judgments? And then what do we do in situations where, how do you define the impact of a brand, especially as a startup?
Yeah. I mean, we care a lot about the brand of a company, because in this day and age, you need to, especially if you're a mission-driven organization, consumers that's what they're wanting. So just saying that's important, at least from our perspective. In terms of the KPIs, that's where an HR consultant might make the most sense. If the person that you hired is a full-time employee and you're trying to figure out how to structure their role accordingly. That said, ideally, you're probably a small enough organization to where everyone is aligned with what metrics and milestones you're going after, and because they know that, hey, this year or by X amount of time that's passed, we need to hit these certain milestones, and that's what everyone's driving towards. And so everyone, I mean, that's at a high level. Everyone's broken down ultimately to what their specific goals are. Actually, I saw this. I'll share a link with something that I saw the other day on a news article. I'll find it in a second. But to your second point, another thought that comes to mind: if you're not sure about wanting to pay that person as much as you need them, as much as they want right now. I think this is where, if they're excited and they want to work with you, you can try to create some sort of contract relationship and or advisor role. Say like, hey, we can't afford you right now. However, we want you to work. Would you be willing to work with us in some sort of, again, advisor role or contractor role at a prorated amount, so that one, you're able to see how they work and you're able to get more confidence that the value that they are going to provide or that you think they will provide is actually true. And that way, you, let's say you have them work with you for 6 months and the value that they provide to the company is more than what you thought. And that helps you raise that next round of capital. And then you're able to pay them what they want, or you're able to make them more of a leader than they were. So for example, it's not unheard of that somebody might make somebody give them a co-founder status or a founder status. I'm not saying do that. I'm just giving you some ideas of the incentives have to be right. I mean, if at the end of the day, this person is motivated by cash and you're just not going to have the cash to pay them, then it's not the right time for them. That's also maybe a good thing for you, because the risk tolerance might not be there for that person, because you can pay them with equity as well. And if they don't understand the opportunity of this company and where it can get to and where it can grow to one day, and that's probably more than they would be making if they got what salary they got right now, then that equation, if that equation just isn't clicking with them, that might not be the right stage for you at a startup.
Mm-hmm. Thank you.
Yeah, and we're coming up on time. I just found this link. It's a newsletter, but it talks about, I'll put it in the chat. I know we're coming up on time. Maybe one last question, if anybody has a question. Thanks for joining, Erica.
I'm down to ask, but I don't want to have. Okay, go ahead.
I was gonna say, not related to this, do you guys have events hosted here in the Bay Area as well, outside of LA?
We are doing more events outside of LA. I live here, so whenever, feel free to ping me and I can let you know. We don't have anything planned right now. We have a couple of them in a couple of different cities across the US. But yeah, whenever I have one, happy to loop you in.
Gotcha. Awesome. Thank you.
Real quick, when do you guys hope to close your next round? You're fundraising right now as well, right?
We're fundraising a second fund, yeah, but we have capital to deploy. So we have another 4 to 5 deals to do out of our first fund, and at that point we'll have done a first close for our second fund, but we hope to close it by the end of the year.
Hi everyone, Frederick here, and learned a lot of interesting points and tips on the call. I'm actually new to the LA market. My company is Jego, and we are piloting our electric vehicle. It's a pod. We actually have Baron Davis as our creative director. So I wanted to, learn more about how we can get involved with Slauson during this pilot. And just if you guys have any e-mobility companies that you're working with currently.
Yeah, Eileen, maybe if you can reshare the links in terms of the information we shared earlier, maybe before Frederick joined. But the short answer is we do. We know climate tech affects the communities that we care about. We actually have one investment in LA, a company called Charger Help. They focus on EV chargers, and I'm pretty sure our firm is familiar with Baron Davis. I think our office is in Hilltop. I think he might go there sometimes. But anyways, happy to have a conversation. Eileen just shared or reshared some of the information in terms of how to reach out to us.
All right.
But I will.
Okay.
Yeah.
I definitely do go to Hilltop, so it's great to see. I will reach out to you guys. Thank you very much.
Yeah, no problem. I know we're coming up on time, so we can maybe end the recording, and then I think Relan had one more last question.
Yeah, well, my last question was, I was reading this book, Ready, Fire, Aim, and it talks about this fractal nature of growth. I want to know if there's a fractal nature when it comes to the finances of a company. This book's talking about how companies usually grow in factors of 7, which kind of makes sense. I'm wondering is there a general rule for like you expect, this much, let's say it was 100 mil, 20 mil, whatever. Do you expect the same proportionate amount in jumps